think there was any one eureka moment. It was a culmination of, the experience that Ranveer and I had. We have been part of the financial services industries for many years, served in retail consumer segment particularly. And, the opportunity and the gap in the market was staring at our face when we thought about both access and product, right? So when we look at India, the new to credit opportunity, the low credit penetration was just a gap that needed some solution waiting to be found, right? And when we overlaid that with, some of the core competencies that Ranveer and I bring on underwriting, on risk analytics and data, it was something that, it just came very naturally to us. So when we think about Kissht and the Eureka moment, I would say it was about what is that right solution from a data and digital standpoint that helps us address what is an underpenetrated, 7-8% of the market that is addressed today to take it to as high as 50-60%. And that Eureka moment was, I think, also reinforced by the fact that India was on the cusp of a digital journey, right? And the macro was all falling in place. Therefore, it just seemed at the right moment to start back in 2016.
I think one of the recurrent ironies of our banking system is that people who may be credit worthy, who may have cash flows, who may be good on many, many aspects, but they don't get credit. Call it because of legacy reasons, call it because of, that's how our financial system has grown. It's a little bit of a cliche to say that, the market is hugely underpenetrated. But part of it is also to do with traditionally banks have been very timid and tentative when it comes to using data, using some of the surrogacy or the surrogate parameters which exist in the market to evaluate these people. There were few very, very tangible things which were changing the lives of, say, a common man, or for that matter, people who were the next generation. These were largely linked to UPI payments, largely linked to behavior of you and ours, which is, going to the e-commerce site and ordering things as against going to the local physical store. And we realized that here is a great opportunity, not only to ride on this, series of infrastructure which are available, but more importantly, there are many aggregators who are coming up in the market to actually serve a market which is, needless to say, is of a different size and proportion. And that is where you can call it our Eureka or the thrill came from when we initially started it. That was the vision or the journey that we embarked on.
Like always, right? I think India is kind of a first institutional investor in most of our portfolio companies, and as also a co-founder VC. I think the key thing we look for is, the market, how large is the market opportunity. Two, the team, does the team understand the domain and, do they have the right experience, skill sets? And three, what's the product offering, right? The way we evaluate the product offering is we keep customer in mind and also understand the other players in the market landscape. So what's the product offering like? And is the business model obviously going to scale? And what value can we add as a team? Do we understand the domain? While we kind of put this lens on the entrepreneurs who pitch to us for our capital, it's very important that we also evaluate us, the investors. Can I really do justice and add value? I think all those things checked out. So that's how, we were one of the first investors in Kissht.
Emotionally speaking, the first big milestone we always remember is the first loan we gave. And I remember we started a company in Parel in Mumbai, and the first loan we gave was to a student, intern student, a medical student nearby. So of course, emotionally speaking, that is the biggest milestone that we all remember and feel very good about. But from a business standpoint, I think we believe we arrived the day I think we started striking big partnerships. And one of the ones that I can recall very clearly is Flipkart. We became their exclusive partner when it came to underwriting and addressing their base of customers for credit and payment solution. And it was arrival for multiple reasons. One, because I would say that kind of solution did not exist in the market. We were literally the pioneers who brought it forward. Two, it was a validation. As you know, Flipkart is of course the market leader. They were talking to many other fintechs, but very clearly the thing that echoes in our mind is they said that the kind of the tech and product solution and the consumer orientation that they saw in our organization was unparalleled, right? So that was a validation of that thesis. And thirdly, of course, that in the initial days of our journey, that gave us a very, very big scale filler that has continued to, sustain us and grow to the extent we are where we are today. Of course, many, many other milestones, but that one is something which I feel is a seminal moment in our journey.
If I remember the journey, I think there are 3 or 4 big shifts which rather comes very, very strongly in our mind. I think first and foremost, as I said, there was a time we took a decision to go completely digital. It was, as I said, much easier said today than it was possible to say or even implement or perceive or implement then, but that was a big shift. That actually required not only changing the organization structure, changing the way we are looking at customers, the kind of customers we were engaging, the proposition building around it, making it very, very simple for the customer, but that was one big change when we just went 100% digital. I think the second big change, we basically said that we are not only going to stick to purchase financing, but we will serve a wider need of the customer. Because many times a customer will come to us, they wanted credit, but quote unquote, they didn't have purchase. So for example, somebody wanted money because they had to pay rent, or for that matter, they had to avail some service, which perhaps was not available on Amazon, Flipkart, and some of the great service platform that you can think of, or the product platform you can think of. And the thing that we decided was to offer then not only personal loan, but offer a whole host of products, which are line of credit, credit card, and so on and so forth. And that actually led to our retention numbers, our customer acquisitions going into a very different level, very different spiral altogether. Just extending that, now also when we are, so one of the big shifts we have done is we are moving to offering credit card to our customers. And this credit card is not one of those plain vanilla garden variety credit card, but a credit card which is very, very built around the customer segment that we cater to, who are young, enterprising, wanting both money for their immediate needs, plus the convenience of taking using this credit card in any of the e-commerce platform or otherwise. So anyway, that was the second big change. Third, something which has been true with us and perhaps true with a large part of the market. When we all went through COVID impact, in the immediate aftermath of COVID, we did make a lot of tweaks to our business model. Part of them were financial in nature, just in terms of moving from longer term credit to a shorter term credit. And that gave us the opportunity for the capital base that we had to serve a very, very large base of customers. But more importantly, just in terms of, defining the journey, catering to customers. I mean, I recall there was a time when in the immediate aftermath of COVID, perhaps we were the only guys who were not only giving, who were operational, but who were operational even in areas which were fully locked down. As lockdown is a word which has completely gone out of our vocabulary because of all this wave thing going. But that's the third big shift which just comes to my mind. There are many, many, as I said, minor shifts which perhaps we do, which are more around just strengthening the customer proposition or striking a large partnership to serve customers better.
While it may sound like a lot of shifts, I think fundamentally what has been the core platform for us has been the focus on the segment, right? The young, enterprising, aspirational people. A lot of them are not just salaried, but there are self-employed people also within that domain. So all of these shifts are, in some sense, the response to our own understanding of this segment improving, right? Their needs improving, our ability to serve, going beyond the first need that we served, going beyond that. And this constant endeavor to continue to remain relevant and become even more relevant to this segment is what has in many ways inspired all of the shifts that Ranveer talked about, and including this credit card that we have launched more recently. So I just thought it's important to also paraphrase the fact that for us the segment has been paramount, and that comes across in our platform Kissht. There is a new there's a platform we launched recently, Ring. The customer centricity, the experience that they get out of it is only because we've always been true to this segment that we cater to.
A lot of times, even fintech companies or fintech startups, focused on a particular segment with a particular product offering, they look the same. But from a Kissht perspective, I think there are 4 or 5 things that stand out. One is really the customer profile, right, that they're going after. Majority of the customers are self-employed and new to credit. By no means, they are subprime. I mean, they're near prime, except that they do not have data in the bureau, right, about their history, transaction history. So obviously, you have to use alternative data sources to be able to do the underwriting. Now, to be able to go after such a large opportunity, technology plays a very important role. 3 areas of technology, again, not just the credit decisioning piece, but also the frauds, right? In financial services, just like cybersecurity, you believe that, you've closed all the vulnerabilities and something else shows up, right? Same way, fraud is obviously a big driver, in terms of health of a financial services business, the technology that they've built. And the third piece is the collections, right? Without really, again, coercing, not throwing a lot of people, how do you really collect? So technology was the second piece. Now, if you really look at it, I think they have one of the lowest cost to customer acquisition, CACs, and very, very good CAC to LTV kind of a ratio. And also, unlike many other financial services providers, if you look at their debt to equity ratio, right? I mean, it's very, very, very healthy. So they borrowed kind of very little money, and they really, the cash cycles are fairly short in terms of cash realization. So that's the reason why, while they have total 20 odd million customers and 4 million type of active customers, and we've disbursed more than $500 million last year, would do more than $1 billion going forward, and also have an EBITDA of like, $6 to $7 million. So clearly, I think it's the customer profile, building the technology, managing your equity to debt ratio, and transacting volumes being very healthy. And last but not the least, a very low NPA. So having the discipline in underwriting, right? I mean, when you're lending money, everybody will borrow. The question is, will they pay you back, right? And how do you manage your book? I think Kissht has done an exceptional job, in that sense. And that's kind of how they're very different from many BNPL players or other digital lending options out there.
Now, for us, what it means from a business model standpoint is primarily 3 things. First and foremost, it puts us into the zone of being the largest issuer of credit card in India. Our aspiration is to issue 5 million cards over a period of next 2 years, of which 1 million will happen over a period of next 6 months. And this will, we believe, will make us almost the largest non-bank credit card issuer. When I say credit card, I use it as a synonym for many other products, because credit card is easier to just explain and say. But what it means, the fundraise would mean, is we will be able to enhance our product portfolio to add many products. And these products include a card with a pay later option, a credit card with a revolve option, creating a scan and pay convenience thing for our customers, and then whole host of things which create a different level of stickiness, loyalty, which are largely linked to the rewards, the vouchers, the discounts, so that the customer can benefit while being in the platform. So a large part of this investment is going to go around just creation of those products and increasing our base of customers and converting some base into offering credit card. So today, as we speak, we have around 3.5 million customers. With this capital, we want to get to close to around 10 million. And out of that 10 million, a majority of them, which is around 5 million, to whom we want to issue credit card. That's the call it the second part. There's a third element to it. See, as much as we are a new age company, we value fresh talent, we value people who are ready, who want to come here with a disruptive mindset. There's also a belief that we want to get some practitioners, people who are really the great guns when it comes to driving some of these businesses, not only in India but outside India as well. So there's a small part carved out even to hire the best of best.
Add one line to that, right? Our goal with this funding is to, over the next 1 year, to become numero uno in credit-led payment solution, as simple as that, right? And by numero uno, I mean both in terms of number of customers we serve, and Ranveer mentioned 5 million, but also in terms of the core proposition, right? The universality of the credit solutions we are providing, online channel, offline channel, mode of instrument, etc. So, simple goal, numero uno, and we are well on our way to do that.